Assalamualaikum and salam sejahtera. This video presentation is prepared for Madam Siti Fatimah Nur binti Minhad. This video presentation is to discuss on the questions from Group Project 1. First, I am going to introduce my group members. There are 4 of us. First is me. My name is AFIQAH HAZIRAH binti ISMAIL. And the second presenter is Nur EZWEEN binti MAZLAN. The third presenter, Nur Anis Natasha binti NAZERI. And the fourth presenter is ALIF Muhammad bin TAJUL ANNUAR. Question 1A. Let's take a look at the information given for the acquisition of Mas Berhad. So, how much is the goodwill amount? Let's find out. Basically, this is the formula in order to get the goodwill. First is consideration transfer plus with NCI, and then less fair value net asset, and then we will get the amount of goodwill, and then it will be minus with impairment, and finally we will get the net goodwill as at 31 December 2020. Where do we get the impairment amount? Let's find out again. Based on the information number 11, it stated that the goodwill on the acquisition of Mas Berhad was impaired by 3 million each year for 2019 and 2020, which means for 2 years. 3 million for 2 years. Okay, now, first, consideration transfer. For consideration transfer, ALIF acquire Mas 80% of ordinary share. So, total CT for Mas is 490 million, but should be minus with 100 million debenture first, and then we will get the 390 million for consideration transfer. The second step for this case is we need to find the fair value net asset first, as shown here. Okay, in order to get the fair value net asset, we should take ordinary share amount, which is 300 million, pre-retained profit 20 million, pre-revaluation reserve for 15 million, and then add with ARR rent 3 million and ARR land 6 million, and then we will get 344 million for the fair value net asset. For the NCI, as we know, the NCI for this question is 20%. Okay, but first let's take a look at the additional information number 12. It stated that it is the group policy to value the non-controlling interest based on its proportionate share of the net assets of the subsidiary on the acquisition date. Okay, now we can calculate the NCI. So, the 20% times with fair value net asset, which is 344 million, which will get 68.8 million, plus with 390 million, so that we will get 458 million.8, and then minus with 344 million fair value net asset, and then we will get the goodwill 114.8, and then the goodwill will be minus with 6 million because the impairment turned out to be 6 million because it stated earlier 3 million was for 2 years for 2019 and 2020, so 3 million times 2 years equal to 6 million. So goodwill 114.8 million minus with 6 million, and finally we get net goodwill as at 31 December 2020 for 108.8 million.
Next, I will answer question 2 part B. Here is computation of goodwill or bargain purchase on the acquisition of Tanjung Berhad. First of all, we need to calculate indirect consideration transfer of Tanjung. The first component needed in the considered transfer for the acquisition paid of 148 millions. The portion of investment of ALIF Berhad in Mas Berhad is 80%, divide and we guided 118.8 millions. Secondly, calculate the NCI. Indirect investment of ALIF through Mas is 48%. How to get that? 80% direct investment in Mas multiple by investment of Mas in Tanjung of 60%. So the balancing of 48 is 52% is for the NCI use. But first, we look up the fair value net asset on the date. The ordinary share of 200 millions, retained earning brought forward 4.5 millions, also loss of 10 million for the year needed to be deducted by the portions. Since investment made on 1st July 2020, so the loss will be portioned by months of 6 over 12 months. So the loss for the period is 5 millions. Retained earning minus 5 million have a balancing of 0.5 million of loss will be deducted under ordinary share, and the fair value net assets is 199.5 millions. Thus, 52% of 199.5 million is NCI. To get the goodwill, 118.4 million plus NCI 103.74 plus fair value net assets 19.5 million would get 22.64 million is a goodwill of Tanjung Berhad.
So let's move on to question 1C. For this question, it required us to compute gain or loss of Mas Berhad. How to calculate it? Let's look at the table there. Consideration transfer 13 million less fair value net asset during the second acquisition 46.2 million. How do we get 46.2 million? We have to add up the ordinary shares 300 million, pre-retained profit 132 million and pre-revaluation reserve 30 million, and the total is 462. But we have to multiply 462 million with 10%, which is the percentage of increase. Therefore, we get gain amounted 33.2 million. Thus, there will be an increase in NCI 46.2 million and decrease in GRP for 33.2 million and decrease in bank for 13 million.
Hi, I will present to you the consolidated statement of profit or loss and other comprehensive income of AFIQAH Berhad Groups for the year ended 31st December 2020. What are the first thing we need to do whenever we handle this type of questions is we need to add up all the item of each company and eliminate any intra-transactions. For these questions, we have three company, that is AFIQAH, MAS and Tanjung. But for Tanjung, we need to apportion it for half year as it is been acquired during the year. Okay, for the first item, revenue, we need to eliminate 10 and 6 million as it is intra-transactions and we will get 800 million. For cost of sales, we need to eliminate 10 and 6 million and plus 1 million plus 1 million for URP closing and we will get 463 million. After that, gross profit will amount to 337 million. For loss on disposal of PPE of 1 million, we need to eliminate it as it is an intra-transactions. For investment income 15.5 million received by AFIQAH, we will plus 9 million and need to eliminate 12 million and 9 million as it is an intra-transactions and we will get 3.5 million. For interest income, will be plus 2 million and minus 6 million intra-transactions and the answer is nil. For admin expenses and selling and distribution expenses, there is no other adjustments, just add up all the items. But for finance costs, we need to adjust plus 3 million and minus 6 million intra-transactions and we will get 70 million. Since we have loss on disposal of PPE, we will have under-provided depreciations disposal of equipment amounting to 0.1 million or 100,000. After that, we will deduct impairment goodwill of Mas Berhad for the year ended amounting to 3 million and we will add share of profit of associate that is Bunga Berhad amounting to 5.6 million that we get from 25 plus 14 times 40% interest. So the profit before taxation is 160 million. For the taxation, there is no adjustments. We will get 30 million. 160 minus 130, we will get a net profit of 130 million. After that, there is other comprehensive income. There is surplus of lands of AFIQAH and MAS that amounting to 20 and 2 million respectively. And the total comprehensive income is 152 million ringgit. I will present the profit attributable to parent and NCI and total comprehensive income attributable to parent and NCI. For NCI, I will show you in working one below. For parents, we just need to take the net profit 130 minus the NCI and we will get 120.86 million for parents. Same goes to the total comprehensive income 152 minus NCI, and we will get 142.66 million. For the NCI, we will start with Mas Berhad. For profit for the year of Mas Berhad is 45 millions minus URP inventory of 1 million minus debenture interest paid of 1 million that we get from 150 times 6% times 4/12. That is the month that still not been adjusted by Mas times 1/3 that belong to Mas. And we minus preference shares dividend paid of 4 millions. For the 4 millions, we times 100% NCI and we will get 4 millions. And for the net profit attribute to Mas, that is 39 million, we will apportion it for 8 and 4 months respectively because there is second acquisitions by ACOB, and the NCI for the first 8 months is 20% and the remaining is 10%. And the total profit attribute to Mas is 10.5 millions. While for Tanjung, there is no profit but there is loss for the year of 10 million. But we need to apportion it for half year as it is being acquired during the year. So we will get 5 million loss. We minus preference shares dividend paid of 2 millions and we will get 7 million loss. Also, we need to apportion it because of the second acquisition by ACOB of Mas. This is because Tanjung is indirectly acquired by ACOB. So, whenever ACOB increase their shareholdings in Mas, Tanjung also affected. So for the first 2 months of Tanjung, there is NCI of 52%, while the remaining is 46%. And the loss attributable to Tanjung is 1.36 million loss. So we have arrived in the consolidated statement of changes in equity of ACOB Berhad Group for the year ended 31st December 2020. For the working 2 until working 6, I will show you in the next slides. We start off with our balance brought down of GRP, NCI and GRR, then we plus any acquisition during the year. For these questions, we acquired Tanjung during the year and the NCI is 103.74 millions. The profit attributable just now, we add it into our SOCI and then we minus any dividend payable and we minus indirect consideration transfer of 29.6 million under NCI, and then we plus any gain on second acquisitions of NCI. Since we gain on the second acquisitions, the GRP increased by 33.2 millions and the NCI will decrease by 46.2 millions. After that, we plus surplus of land of ACOB and Mas. For ACOB, 20 million goes under GRR, and for Mas, 2 millions we need to apportion it between GRR and NCI. 1.8 we get from 2 millions times 90%, and for 0.2 we get from 2 millions times 10%. After that, we plus preference shares of Tanjung, 40 million under NCI. This is because Mas does not acquire any preference shares of Tanjung. For working 2 until working 4 are the balance brought down of GRP, NCI and GRR. What are the items under the calculation of balance brought down? For GRP, we will have RP of ACOB 200s. We minus any prior year adjustments. So we minus impairment goodwill year 2019, 3 millions. And we will add post-acquisition RP of Mas, 82 millions times 80% before the second acquisitions. We will get 262.6 million for GRP. For NCI, we will have NCI at acquisition of Mas 68.8% plus post RP 82 times 20% plus preferential capital of MAS 80 million times 100% because ACOB does not acquire any preferentials plus post RR of MAS 15 million times 20%, and we will get 168.2 million for NCI. For GRR, we plus RR ACOB 60 million and post RR of MAS 15 times 80%, and the total is 72 million. For working 5 and working 6 are the ordinary and preference dividend. For ordinary, we just plus interim and final dividend and we less any intra transactions. And we will get 35 and 4 million respectively for GRP and NCI. For working 6 preference dividends, Tanjung will need to plus 2 million as they declared but did not record it. So we will get 6 and 8 million for GRP and NCI. So for the consolidated statement of financial position of ACOB Berhad Group as at 31st December 2020, the concepts are still the same as the consolidated SOPL. We need to add up all the items in each company and less any intra-transactions. For the goodwill, we will get from the calculation of goodwill, and the investment in associate I will show you in the working 7. For GRP, NCI and GRR, we get it from our SOCI, and 6% debenture 150 times 1/3 because 2/3 was acquired by ACOB. So the remaining we will get 50 million, we put it in our consolidated SOFP. And then we plus ordinary dividend payable, interest payable and preferential dividend payable. For working 7 is the calculation of carrying amount of associate. First is the investment at cost 60 million, then we plus the post acquisition reserve of 40 million times 40% interest of associates, and then we will get the amount to be transferred to our consolidated SOFP is 21.6 million.
Question 2. In question 2, Damia and Delisha was contented with the idea that the investment in Delhi should be applied. The acquisition methods and financial statements of Delhi should be consolidated with Mega Berhad according to MFRS 10. The question is Mega Berhad fulfill all the requirements needed in according MFRS 10? Let us find out and find the solutions based on the standard. According to MFRS 10, financial statement of Delhi Berhad should not consolidate with Mega Berhad, and acquisition method cannot be applied. Why is that? Mega Berhad has existing substantive right that give it ability to direct the relevant activities. However, the investment should be investing at least 50% of the share to recognize as subsidiaries and entitled to consolidate the financial statement. In the case, Mega Berhad does not have enough voting interest in Delhi and indicate it does not have enough power. Another possible standard that's suitable for the case is MFRS 11, joint arrangement. According to MFRS 11, the companies can recognize as a joint venture where the parties have a joint control of the arrangements, have a right to the net asset of arrangements. Also, the joint venture should recognize the interest as investment by using the equity method according to MFRS 128, except when Mega Berhad is exempted by standard. Lastly, the possible standard that can be used in the case is MFRS 128, investment in associate and joint venture. It is stated that Mega Berhad only invests 40% of share in Delhi Berhad. Thus, it is just an investment in associates according to MFRS 128. In this case, equity method need to be used, except when the investment qualify for the exemptions. The initial cost and the changes of carrying amount of investment will be recognized in the Berhad's profit or loss after the date of acquisitions. The profit or loss from the investment should be recognized in Marga Berhad profit or loss. Adjustment of carrying amount may also compulsory for changes in Marga Berhad proportionate interest in Delhi Berhad arising from changes in the investee equity that have not been recognized in the investee's profit or loss. Question 2b. Before the share buyback, Org and Beach Berhad are associates and accounting for using equity method of accounting. It is because 40% of the 100 ordinary share issue is not enough to control Beach Berhad, but only exert significant influence. After the share buybacks by Beach Berhad, Org Berhad is the parent of Beach Berhad since Org Berhad owns 57%. How to calculate it? 40% divided to balancing ordinary share 70%, we get 57% of Beach Berhad total voting right after buying back 30% of the total outstanding shares. Thus, Org Berhad has control over the Beach Berhad operations. Control implies that you have authority over the investee. Exposure to or rights to variable returns as a result of its engagements with investee, and that you may use your authority over the investee to influence the amount of investee returns.
So now I am going to discuss on question 3. First, let's take a look at the question. Here in the question is stated that Hihi Berhad acquired 80% interest in Kuku Berhad. Okay, and then it says that on January 2021, Hihi disposed 50% of its interest in Kuku. Okay, noted. Now we are going to find the amount of the goodwill in order to calculate the gain or loss on the disposal of the share for Hihi Group. Okay, first, consideration transferred 30 million plus with NCI 20% times 25 million, which equal to 5 million. So 5 million add with 30 million equal to 35 million. Now 35 million minus with fair value of net asset, which is 25 million. So the goodwill for the company is 10 million. So now the question is whether the disposal of the share will result in gain or loss. Let's find out. Okay, for the gain or loss on the disposal of the share Hihi Group Berhad, first we are going to calculate for Hihi Berhad on this side, on first column, which is proceed 50 million. Minus with carrying amount of investment, which is 30 million times with 50%, which is equal to 15 million. So for Hihi Berhad, we get gain, which is 35 million. Okay, now for the consolidation, for the third column, we take proceed 50 million plus with fair value of remaining shares 20 million equal to 70 million. And then minus with net asset at 1 January 2021, which is 70 million times with 80% equal to 56 million. And then less with goodwill remaining, the one that we calculated earlier, which is 10 million. So 70 million minus with 56 million minus with 10 million equal to 4 million for consolidation. So we can conclude that the disposal of the share for the Hihi Group result in gain. Okay, next. For the question B, is the relationship between Hihi Berhad and Kuku Berhad will remain as subsidiary or else? Now, in the beginning, Hihi Berhad has 80% of the issued share capital of Kuku Berhad. On January 1, 2021, Hihi Berhad disposed 50% of its interest in Kuku Berhad, which makes it to 40%, which is 50% times 80% for 50 million and fair value of 20 million. Okay, so a company is treated as having a controlling interest when it holds more than 50% of the issued share in the company. Thus, Kuku Berhad is not subsidiary to Hihi Berhad anymore. For this situation, the company disposed part of its interest in subsidiary but retains sufficient interest to exert significant influence over the investee. Kuku Berhad will be treated as associate company to Hihi Berhad because it's still able to exert significant influence over Kuku Berhad. So, the relationship between Hihi and Kuku after the disposal will be investor and associate. Thank you.
Lastly, let's move to question 4. Based on the situation given, which company has power over Great Berhad? Now let's refer to the textbook from page 306 to 309. An investor may hold a majority of the voting rights, but its voting rights may not be substantive. Voting rights must provide the investor the current liability to direct the relevant activities, which will often be through determining the operating and financing policies of the investee. So to answer this question, firstly, Great Berhad has no shareholders that held more than 50% of the shares in the company. And according to FAR620, Coconut Berhad has power over Great Berhad. Why is that? It is because Coconut Berhad has the potential voting rights, which give the investor the ability to direct relevant activities, such as the activity that significantly affect the investee direct return. An investor also has the practical ability to direct the relevant activities unilaterally. But what happened to Apple Berhad? Why Apple has no power over Grape? Even though Apple Berhad held the majority voting rights of 45%, it does not fulfill the purpose and design of the investee. Therefore, it cannot have a significant effect on an investee's returns. Same goes to Strawberry Berhad. Strawberry also has no power over Great Berhad because the company do not have the direct control over any relevant activities of Great Berhad. In conclusion, Coconut Berhad, with less than a majority of the voting rights, still has right that is sufficient to give it power as it directly related with Great Berhad's main activities. And that's all from us. Thank you.